Hello, good morning to everyone, or good afternoon, depending on where are you located today. And thank you for joining the Spain-US Chamber of Commerce to this webinar that we are going to talk about Spain as the bridge for US companies interested in entering Latin America. But before we begin, we would like to remind everyone that from the Spain-US Chamber of Commerce, we host several webinars during the year where we try to address different topics of interest. Some are related to tax, legal advices, but also technology and many other topics that we address during the year. For those of you interested in all those webinars, you can check our website, which is spainchamber.com, and you will be able to find in our YouTube channel all the webinars that we hosted in the past years, as well as the future webinars and events that we will host in the following months. So thank you so much for joining us and spending this morning with these two professionals that would guide us through the advantages of using Spain as that bridge. Also, I would like to remind everyone that this webinar will be recorded and we will share it in our YouTube channel, as well as the presentation. We will also send the presentation to all the attendees with a link to the video, so you could share those tools with your colleagues or friends interested in the topic, as well, of course, as the contact information of our two guests from today. So if you prefer to contact them directly for specific consultations or questions, you can do also that. And last but not least, we will address questions and answers at the end of the presentation. So everyone attending will be more than welcome to share their thoughts and their questions. And to do so, you just need to click on the questions button or tab that you will find on your control panel on the right side of your screen. You will see several tabs, and one would say questions or preguntas, depending on the language that you chose. And you can send your questions there, and we will address all of them after the presentation. So you don't need to wait until the end to write your questions. You could write your questions during the presentation, and we will address all of them at the end. Without further ado, I would like to introduce you the two experts that will be with us today. So we have ECIJA, which is a law firm. For those of you that are not aware about this company, ECIJA is a Spanish independent full-service law firm with 35 offices. 17 of those offices are in Latin America. To date, ECIJA has consolidated its position as the Latin America firm with the largest presence in LATAM, a leader in digital economy, and as the most innovative firm in continental Europe. And today, we are very lucky to have Ricardo Oliveras and Eduardo Palao from ECIJA. Ricardo is a partner at ECIJA, Barcelona's corporate merge and acquisitions department, specializing in commercial law and the sports industry. With extensive experience, he has advised international sport event organizers, sport federations, and associations on legal and sport matters. Ricardo's expertise extends to advising companies on commercial contracts and corporate law, serving as secretary and board member for clients. And Eduardo Palao has over 10 years of experience specializing in advising family companies, large national business groups, consolidated tax regime, and multinational companies on direct and indirect taxation. His expertise also encompasses personal tax structures for high net worth individuals. He holds an LLB in law from Pompeu Fabra University and an MA in tax affairs from ECIJA, and he is a member of the Barcelona Bar Association. So thank you so much, Ricardo and Eduardo, for being with us today.
Thank you, Juan Carlos. And thank you to the Spain U.S. Chamber of Commerce for inviting us today to give this seminar, to this webinar, to the members of the chamber. It's always a pleasure to collaborate with the chamber in these projects. So,
thank you so much.
Okay, thank you. So, well, we will start with our webinar, with our presentation. Good morning to everyone who is in the States, or good afternoon if you are in this side of the Atlantic in Spain or in Europe. And basically, our intention today, myself and my colleague Edu Palao, who's our tax advisor here at ECIJA, is to give all of you like pragmatic insights of the advantages to structure your international business in Latin America through a Spanish company. The Spanish system, our Spanish jurisdiction, is a quite solid and robust legislation. And as we will see later on, it has very strong bonds, cultural, political, and legal with most of the Latin American countries. This is the reason why during the last 20 years, Spain has been used by some international groups as a hub to invest in Latin American countries. At the same time, due to the fact that Spain has a double taxation treaty, an investment treaty with the USA, provides to US investors the flexibility and also the certainty that they are investing in a market as the Spanish market to go to the Latin American jurisdictions. So today we will cover 4 different topics on a very general manner, because important also is we will share with you some examples, real examples, some case studies that my colleague Edu and myself have been working for some clients during the last three years. We will make a short introduction to the Spanish holding company. We will refer later on my colleague Edu to tax incentives. Then we will make a short comment on what are the bilateral investments treaties, which Spain is the country that has signed more bilateral investments country of any country in the world. And finally, we will cover 2 examples. Okay, so just starting with the Spanish holding. What is a Spanish holding? I want just to give you some basic insights. A Spanish holding, first, from a corporate perspective, you need to understand that it's a limited liability company. It's either a LLC or a corporation or an Inc. in the US. So it's a corporate company. It's a legal entity. As such, it will be subject to our Spanish companies law. In this case, for the Spanish holding, which is key and essential, it is in the bylaws of the company. The corporate purpose is specifically mentioned that one of the purposes of this company would be, or the only one would be, the management of shares or securities of companies non-resident in Spain. Also, as a Spanish company, it is important that its domicile is in Spain. You don't need a proper office. It can be either a business center. So it's just, but you need an address in Spain. And finally, the body of administration, well, it can be either a sole director or a board of directors or 2 joint and several administrators, whatever alternative that our Spanish system provides. So first idea is a Spanish holding is a Spanish limited company as such. Also, from a tax perspective, and for you to understand, when we refer to Spanish holding companies, we used to call them by the nickname of EDVE, ITVE, which means in Spanish, entidades de tenencia de valores extranjeros. Okay, so when a Spanish limited company becomes an EDBE? Well, basically, it is very simple. Once you have incorporated your company in Spain as a limited liability company, you just need to make a disclosure and a notification to the Spanish tax authorities, informing them that you will be operating in Spain under the regime of a Spanish holding / EDBE. That, as long as you provide this notification, you will be automatically included in this system. The tax agency will not make any control on this. So once you have notified that you are an EDBE, okay, would mean that as a Spanish company, you will be subject to the Spanish tax regulations, which will be the Spanish tax corporate law, but under the specific regime of Spanish holdings, EDBEs. And as my colleague Edu will explain you later on, the fact that such a Spanish company is qualified as an EDBE would mean that we'll have some exemptions from taxation on dividends and capital gains. So for you to know, this is an example of the different taxation treaties that Spain has signed with countries all around the world. That means that in addition to have a limited liability company in Spain under the regime of Spanish holding, you will also benefit for all these double taxation treaties that Spain has agreed with most of the countries. So from a pragmatical view, what are other considerations that need to be taken into account when we talk about Spanish holdings? Do we need to have human and material resources to run the company? Yes, we need. I mean, basically, the Spanish tax authorities understand that a Spanish holding company should have at least the minimum resources to operate and to manage a shared portfolio. This does not mean that you need like 3 or 4 employees. You are not an agency, you are not a firm, but at least to show them that that company has substance and you have one person at least who is managing the portfolio of shares of the EDBE. So a question was, do we need to hire employees to have and recognize an EDBE? Not anymore. Not anymore. If one of the directors of the company is also engaged in the management of the holding, so that director could be considered as an employee. And as such, the Spanish authorities will understand that at least there's human resources because there is one person that it's at least on day-to-day or management of such a Spanish holding. It shouldn't be on a full-time basis at all. No, but at least someone who's taking care of that company. Another question that was addressed is, okay, the fact that a Spanish holding is basically instrumented for investing in foreign companies, can be also this Spanish holding company owner of another Spanish companies? Yes, absolutely. Within your portfolio of shares, you can have shares of your subsidiaries in Latin America, and also if there is an interested investment in Spain, you can invest in that company in Spain. The only difference is that when we talk about the tax treatment, about the payment of dividends or capital gains, a different matter would be if these dividends and capital gains come from foreign entities or it comes from a Spanish entity. But the fact that you have a Spanish holding does not limit the fact that you can also use this Spanish holding to invest in a Spanish business too. That's completely possible. And following this principle, some clients also, they are also considering, well, can I use this holding company also to use for any other business activities? For example, we have a client right now that he's using his holding company here in Spain also because he's doing some trading with Asian countries. So he has two businesses. Both businesses, yes, can be under the scope of the holding company. One will be treated according to the tax regime for holding companies, and the other will be treated according to the corporate tax law. And finally, a very ongoing question is, okay, how much will it cost me to maintain a Spanish limited company / holding in Spain? Well, it will depend on the firm and on the CPA that you hire in Spain. But obviously, it's much cheaper than in USA. And I would say that here CPAs, we call it here in Spain gestorías, and with a proper gestoría, it shouldn't cost you to comply with your annual tax and legal obligations more than 6,000 or 8,000 euros. On top of this, if you need to incur in legal fees, it will be convenient in case of some tax advice, but it shouldn't be much more. Okay, so to sum up, why an EDVE, which is a Spanish holding, is a proper vehicle to invest in Latin America? First, due to the broad network of Spanish tax treaties, as I have shown you in a previous slide. Also, because the fact that we are in Spain and we are under the EU, European Union umbrella, we have this European character, which provides a tax-efficient route even for investments to this Spanish holding coming from EU members. And a third point would be that due to the double taxation treaty that we have between Spain and USA, obviously this provides corporates transparency and tax efficient elements in any direct investment between Spain and the USA. A fourth point would be the fact that Spain has entered in a large number of bilateral investments, okay, with different countries all around the world, and in particular with Latin American countries such as Venezuela, Colombia, Argentina, Chile. This is very important. I mean, it's not only about taxes, it's also about protecting just investments, as I will mention later on. And finally, as I said, if we structure this investment in Latin America through a Spanish limited company, which is under the EDVE system, obviously the taxation that also offers exemption on dividends and capital gains. And that's it for my first introduction. And I would pass the floor to my colleague Edu, who will now cover more specific matters on taxation.
Thank you very much, Ricardo. If you can pass to the next slide, please, Ricardo. Thank you. So, Ricardo has already explained that the profit distribution from a subsidiary in a Latin American country receives a very beneficial tax treatment thanks to the fact that Spain is one country that has signed the most of double tax treaties with this Latin American country. Now we turn to the tax incentives inherent to the Spanish EDVE holding. This is at the Spanish holding level. As Ricardo said, we call the nickname for that holdings is EDVE holding. The special tax treatment or the beneficial tax treatment is due to the fact that the Spanish corporate income tax law provides a special tax regime for foreign securities Spanish holding companies. This is the special tax regime name in English, but we commonly call it the EDVE special tax regime. As Ricardo said, we call this type of holding companies. So as you will see, we have divided the explanation of the tax incentives that operate at the holding level in two slides, let's say. The reason is that at the EDVE holding, the tax incentives are reflected in two areas. The first area affects the profits received by the Spanish holding company from the Latin American subsidiaries. These incentives is a 95% exemption on dividends and capital gain from the transfer of the capital gains from the transfer of the shares of the subsidiaries in Latin America. There are two requirements that have to be met to apply these incentives, and it is the holding company that have to meet these requirements in the Latin American, in this case, subsidiary companies. The first one is a percentage shareholding, and this means that the holding company should have a percentage participation above 5%, and the second requirement is a holding period. And this is that the EDVE holding company should have 1 year continuously this 5%, this minimum 5% participation in the subsidiary. So, as a consequence of the application of this exemption on dividends and capital gains, the effective tax rate for a EDVE holding company would be 1.25%. The effective corporate income tax rate. So the second area affects the profits that would be distributed to the EDVE holding company shareholders, and precisely to non-resident for tax purposes shareholders. And as you see here in the slide, they can be non-resident companies, both non-resident companies and individuals. The requirements to be met to apply this special tax regime at a shareholding level are the same but for the holding companies in the subsidiaries. This is they should have at least a 5% participation in the EDVE holding company, and they should have this participation for at least 1 year before the application of the exemption. For dividends, this this requirement can be met after the reception of the dividends. It is not the case for a capital gain that could arise from the transfer of the shares. Then there is a third requirement, and this is that the shareholders cannot be a tax resident in a territory that is considered a tax haven for Spanish tax purposes. If it is the case, this special tax regime, this EDVE special tax regime cannot be applied. So the shareholders, in case of an eventual tax audit by the Spanish tax authorities, should be able to provide a tax residency certificate in a country that is not considered a tax haven for Spanish tax purposes. As with Ricardo, we understood that this can be a lot of, let's say, theoretical information. We thought that the best way to understand the benefits of this special tax regime is to look at a very simple example that we have prepared and simulates a profit distribution from a dividend, in this case, from a subsidiary located in Colombia. Colombia is a country that has in place a double taxation agreement treaty with Spain, that distributes a dividend to a Spanish holding company, and then this Spanish holding company distributes this dividend to their shareholders that are which are tax resident in the United States. So Ricardo, if you can please pass this slide. So as I said, we prepared this very simple example that considers a profit distribution of a dividend that amounts to 100. Since the double taxation agreement between Spain and Colombia provides that dividends are exempt from withholding tax at the source, this dividend would not be subject to withholding taxation in Colombia. So the Spanish holding EDVE would receive this dividend amounting to 100. Since in Spain the corporate income tax law provides an exemption, a 95% exemption on dividends from foreign source, the effective taxation in Spain would be 1.5. So the net profit to be distributed to the USA shareholders would be 98.75. And the third step, and this is the second area of the EDVE special tax regime, that consists in that the profits distributed by EDVE holding are not subject to taxation in Spain. So the profit distributed by the Spanish EDVE holding would be 98.75%, which means that no withholding tax would apply in Spain. So in conclusion, to invest via Spanish holding EDVE, well, the fact of investing via Spanish holding EDVE implies a fee consisting of a 1.25 tax on the profits distributed by the foreign subsidiaries in Latin America. So now Ricardo will explain another example that we hope will help to understand better this special tax regime.
Thank you, Edo. That's right. And before we move with two final examples restructuring of companies using the Spanish bridge, as I like to call. Let me just to make a small remark and comment on the bilateral investment treaties. And when I will explain from my experience, when we've been involved in restructuring companies group, and they've been considering U.S. companies and even South American companies invested by U.S. investors, or European companies invested by U.S. investors, when they have approached us asking how we could structure the business to look for to search for a more tax efficiency system using this subholding, Spanish subholding, even as a financial vehicle, which can also be the investor of the different subsidiaries and finance the different subsidiaries in Latin America. We have also informed them that there is another question which should be taken into consideration depending on the activity of that group, of the client, which is the bilateral investment treaties. USA is also one of the countries that have signed more bilateral investment treaties as Spain. So, as a short introduction, and then I will make you why it's important also Spain in this context. As a short introduction, just to let you know that for those of you who are not really familiar with the bilateral investment treaties, basically is what I wrote here in the slide. It is basically to set out the terms and conditions for private investment, not public investment, for private investment made by nationals, which could be either, and companies could be either individuals or entities of any kind, from one country to another country and vice versa. Okay? So countries, when they sign these kind of agreements, basically they pursue three objectives, okay, which is a fair and balanced treatment to their citizens in each country. In this case, in Spain, for example, in Colombia, just following with the example of Edo. Second, to have a system which will allow this foreign investor, for example, in Spain, who has a Spanish investor who has invested in a company in Colombia, to have a protection in case of expropriation. And that's very relevant. That's very relevant because we know that in most of the Latin countries, politically speaking, they are not very stabilized. So it is not like Europe or the USA. But in some countries, we have seen in the last 20 years that some countries who has been traditionally very stable, they are not longer anymore, or vice versa. Some countries that were not really stable, they are. So these bilateral investment treaties at least provides for the investor, the Spanish investor, a tool to go to the courts, in this case, international arbitration, in case their business in that Latin country is expropriated for whatever reasons. And finally, they also offer a free transfer of means and full protection and securities in terms of the value. That refers more on the value of the investment in that country. So Spain, as I said, is one of the largest. It's one of the countries with the largest number of bilateral investments agreements signed. And here, the key point with Spain is the following. And when a country negotiates this kind of bilateral agreements, what Spain has tried also is that it is considered a Spanish investor, the individual or company that makes directly the investment. For example, if we have a limited liability company in Spain who invests in Venezuela or in Colombia, okay, the fact that it's a Spanish company will also allow us to apply to this bilateral treaty, regardless the ultimate shareholders, beneficial owners are Spanish or not, are Americans, or even they are from the same country of that investment. So we have had examples and have advised clients who basically, for example, from recently from Colombia or previously from Venezuela or Argentina, that they had investments in being nationals of that country. They prefer to structure a business through USA and Spain because the fact that we have Spain as the direct investor in their company in Argentina, for example, or Colombia or Venezuela, it allowed them to be protected through this bilateral treaty. And that's a key point. That's a key point, that it's always negotiated on a case-by-case basis, but for whatever reasons, the Spanish government has always pursued. Just to give you an example of bilateral investments that Spain has signed with Latin American countries, here you have with these countries. Okay, and finally, and to conclude this webinar, okay, is just to provide you two case study examples about using Spain as a bridge for your businesses. Okay, the first one, okay, and that's a true case. It was a client, okay, it was a US client, a US company that has businesses in these 4 Latin American countries. This client, he also is involved in the energy industry, okay, industries which it is of public interest in all these countries, which means because it's of public interest, there may be always the threat that if there is any change on a political status, obviously that company that he has in those countries, because it's in the energy sector industry, it might be expropriated. So that was also for him was interesting to use Spain as a bridge to have these investments. So when the client came to us, that was his structure. So from a corporate perspective, it was not really complex to introduce a Spanish holding, which is basically we incorporated a Spanish holding. In this case, how we did it? Basically, this US company set up a Spanish company, okay, by contribution of the shares of the subsidiaries. Okay, so it was this is completely acceptable in the Spanish corporate system. You can contribute with both cash consideration or value in kind. In this case, value in kind are the shares of the subsidiaries. So the shares of the subsidiaries were directly incorporated by the US holding to the Spanish. And then this is the setup that we had after this incorporation of the Spanish holding. In this case, and this is why I put it as an example, due to the fact that USA has a specific region with Guatemala, I'm not an expert on this was informed to me by the US advisors, it was finally decided with the client to keep aside Guatemala. So Guatemala was still directly controlled by the US company. However, the subsidiaries in Honduras, Dominican Republic, and Colombia became subsidiaries of the Spanish holding. And in this case, we also have another difference, which is the following. Spain has a double taxation treaty with Dominican Republic and with Colombia, but not with Honduras. In any case, we made the exercise, okay, for the client. And as apologies because this slide, some of it is in Spanish, but I'm sure that you will understand because numbers are numbers. And if you are involved in financials or taxes or at management level, I'm sure that you will follow the numbers easily. Basically, we had to make 2 exercises. First exercise was the transfer of profits or dividends or interest from the Honduran subsidiary to the US parent company. And at the same time, we made the same exercise for Colombia and Dominican Republic.
While for Honduras, we make a clear comment that there is no a double taxation treaty. The fact that in Honduras there is a corporate income tax for the companies, a rate of 25%, provides also the fact that we can use the ECIJA system. That's important. It is not Honduras. It is not a tax haven country. So, although we couldn't benefit from the double taxation treaty from Honduras to Spain because it does not exist, in any case, we could benefit from the ECIJA regime from the Spain to USA. I forgot to tell you something which is important. Let me revert to these previous slides. As Edu said, it's in the ECIJA regime, okay, will apply as long as you have kept at least for 1 year your shareholding, which means when you make this structure, okay, at least you have to keep in mind that if you want to take benefits on the ECIJA regime, you need to keep this shareholding for 1 year. So you cannot incorporate the Spanish holding and then after 1 month to try to sell your subsidiary in Dominican Republic, because it will not benefit from this regime. It should last at least for 1 year. So we make the exercise from Honduras. Here you have the numbers in 3 different categories: dividends, capital gains, and interest, which is very common because this structure also, it is also very used by this client and other clients to use the subholding as a financial vehicle. It may be the case that things in Honduras are working extremely well, they generate dividends, and they move the dividends up to the Spanish holding, and then from the Spanish holding, because they are investing in Colombia or in Colombia or in Dominican Republic, they finance the activities in Colombia and Republic, or vice versa. So we make the exercise for Honduras, and we make the exercise for Dominican Republic and Colombia. You can see in the case of Colombia and Dominican Republic that the benefit is huge. Also, this client now is going to open a subsidiary in Chile and in Mexico, countries where we have double taxation treaties. So it should be analyzed on a case-by-case basis, but in most of the cases, the structure fits perfect. And I want to say, before moving to the second example, that even if the case that it doesn't fit perfect, or you are considering to use the formula of the Spanish bridge, the fact that there is a double taxation treaty between Spain and USA, in those cases that you cannot apply to the ECIJA regime, you are always allowed to apply to the double taxation treaty between Spain and USA. So you don't need to be a holding company. There may be the case that you're having a trading company in Spain. So it will work too. Obviously, the numbers will be slightly different, but the tax benefit will be close to this. So another example that we work recently, it is a Spanish startup, okay, who has been running his business in Barcelona quite well for the last years, but he decided to make the move to the USA. And they wanted to go to the USA mainly to find a US investor, and secondly, because they were looking for 2 things: launching their software in the US, but also considering to go to the Latin American country. But the first thing was money. Money is key, as you know, so they consider it important for them to go to the US market. So in this case, it's a little bit more complicated, okay? And in this case, the double taxation treaty between Spain and USA is key and very important, because it will benefit the Spanish shareholders and the forthcoming US investor in having more benefits in any tax
I would say, final income generated by this Spanish company. So basically, what we made is the first move was to, let me go through, to okay, the first thing was to set up a trading subsidiary in the US. That was quite easy. I mean, the Spanish company set up the US trading company you have here directly. On a later stage, the second movement was to transfer all the IP, or in particular the IP, and some suppliers and clients to the US company. This is key because, as some of you may know, in particular for professional US investors or venture capitals, when they finally accept or they to invest in a startup, in particular in a startup, in some cases they ask that startup to transfer the IP to the US company because they become basically shareholders of the US company and they want that the US company holds the IP, which is at the end the most valuable asset of that startup. So we transfer some of the IP from Spain to US. Here, in the case of Spain, we should take into consideration what we call a business migration, which also happens with other European companies. And this is something that you will need to take into consideration, but it is not the subject for today. And finally, okay, once we have incorporated the company, we basically carry out a kind of flip, which is we have two companies, Spanish companies, and basically what we did is to move the US up, moving what we call a flip of shares, okay, share exchange agreement. So by doing that, we ended up having the US company in the middle of the Spanish trading company and the Spanish holding company. And on top of the Spanish holding company, there are the US investor and the founders. So it was very beneficial to carry out all this restructure because taking opportunity of the double taxation treaty between Spain and USA, and on the other side, the double taxation treaties between Spain and Latin American countries, that company is currently taking so much, saving so much money on taxes. That's basically the final call. And well, that's all for today. That's all for today. We focus basically our webinar on case studies, and hope it was very interesting for you. Once again, thank you to the Spain-US Chamber, to Juan Carlos, Ia, and all the team for inviting us.
Thank you so much, Ricardo and Eduardo, for the presentation. A lot of interesting information. We have some people asking to share the presentations. Yes, we will share the presentations with all the attendees, as well as the contact information from Ricardo and Eduardo, and also the recording of this webinar. And you will be also able to watch it in our YouTube channel, where you will be able to find not only this webinar, but also the other webinars that we've been doing for the past several years. And now we are opening the Q&A, so any of you interested in asking any question to our guests today, please send your questions through the questions tab that is located in the right side control panel of your computer, and we will share those questions immediately with our guests. So first question that we have, it's from Cristina, and she's asking, how do you register the EDVE?
If you want, Ricardo, I will answer this one. And it's very simple. You have just to submit a written statement to the Spanish tax authorities, and then you have to inform in every corporate income tax declaration that you are applying this special tax regime at the moment of submitting this the corporate income tax return.
Perfect. Perfect. Thank you so much, Eduardo. Another question that we have is regarding the last example not the last one, I'm sorry, but the previous one that Ricardo was sharing with Colombia and the Dominican Republic. We saw in the chart the tax that the holding company had to pay in Spain. But the question was, do the local companies in Colombia or Dominican Republic have also to pay a corporate tax in those countries?
Yes, I will also answer this one. There are the first point to take into account here is that when Spain and almost all the countries in the world sign a double tax treaty, one of the requirements is that both countries should have a similar tax in terms of individual taxation and corporate taxation. So the answer is yes. In Colombia, I think that the corporate income tax rate goes from 25 to 35%, but it's not my field, let's say. So I would have to check, but the answer is yes. But the key point here is that if there is not a tax treaty in place between the country that is from which is the company that is distributing the profits and the country of the company that is receiving these profits, usually the withholding tax rate applicable on that profit is much higher than the one that the double tax treaty provides.
Okay, thank you so much, Eduardo. Another question is, in those examples, in case that the end company is a US company, like I believe the last example that Ricardo was mentioned, the investors were a US company. If that is that US company, or does that US company have to pay anything to the IRS for the dividends that they obtain or the capital gains that they obtain through these Spanish holdings?
Well, that goes through the double taxation treaty between Spain and USA. So if those dividends were not coming from Spain, but were coming from a company that USA has not signed a double taxation treaty, it will be taxable according to the general tax rate that provides in the US tax system. The fact that there is this double taxation treaty, and depending on the shareholding of this US company, the dividends that this US company will receive, okay, will be taxable in USA, but for sure it will be on a lower rate, and it may be even possible that they are completely tax exempt. That we need to go to the double taxation treaty, but it will never be the case that will be the general standard rate. It will be always lower or completely exempt.
Wonderful. Thank you so much. More questions that we have. At the beginning of the presentation, Ricardo was mentioning that the Spanish holding didn't have, or it was not a requirement to have employees in case that one of the shareholders act as managing director or manager of the holding company. The question here is, Does that managing director have to be a tax resident in Spain or not? And the second question is, does this managing director have to obtain a salary for this job or not?
Okay. Well, I will answer the first part, and I will let Edu to answer the second part if it works for you, Edu.
Sure.
Maybe first, I apologize if it was not really clear. I mean, the director of the company does not need to be a shareholder. It could be either a shareholder or not shareholder. It could be any independent person. So basically, he doesn't need to be a shareholder. And second, he needs to get a remuneration, obviously, because he will need to get a remuneration because it's the way to provide an example to the tax authorities that he is engaged in a manner in the management of the company. He cannot work on without any remuneration at all. That's clear. If he's not going to receive a remuneration, then an alternative would be to hire an employee, which this employee under a labor relationship will be taking care of the company. Then the final question, if he needs to be a tax resident or not tax resident, I know that there has been recent case law in Spain talking about this matter, but because for your information, the tax authorities some years ago, they considered that it was a requirement for the EDVES to have an employee. However, recent jurisprudence and case law have admitted finally that you don't need an employee. If one of the directors provides those services, it is sufficient. And regarding if this director has to be a tax resident or not in Spain, right now I don't know, Edu, if you can guide us.
No. As you said, Ricardo, there has been a lot of debate concerning this aspect, but the last case law finally defined the criteria. And answering the question if you need a Spanish tax resident director, the answer is no. The criteria is that, or what has to be done is that at least the general meeting of the shareholders of the EDVE has to take place in Spain. And yes, you need to prove that there is a director or there is a person who is taking care of the management of the EDVE holding and he's receiving a salary, but it can be at a corporate group and this person can be tax resident wherever. So, no.
Okay, perfect. Wonderful. Thank you so much. More questions. Can I operate under this model, but without having a proper holding in Spain, but an operating or trading company?
Yes, but in this case, the model works perfect is the same, what I have already explained to you in this webinar, it will be identical from Spain to subsidiaries, absolutely. And then from Spain to USA, it will be through the double taxation treaty between USA and Spain. And basically the double taxation treaty between USA and Spain, which was amended recently 2 or 3 years ago, it have encouraged more benefits for US investors. So as long as the US company is the shareholding is held for more American nationals, American companies, they will take more benefit on the structure.
Yes, and answering to that question, there is only one point that I would like to add, and is that, as Ricardo said at the very beginning, in Spain, to have the consideration of a holding company, no formal requirement is needed. That means that you can be a holding company and have, let's say, an operating business line, also an operating business line. To apply the special EDVE tax regime, you just have to ask for it by the presentation of the written statement and inform in every corporate income tax declaration. So both can be done at the same time.
Perfect. Wonderful. Thank you so much. And let's see, our last question today. Has any Spanish company applied to the application of a protection of capital treaty against a country?
Yes, many companies against the government of Argentina, against the government of Venezuela. There are some cases. I will talk about two very important companies, but also we do have clients which, because are confidential, I will prefer not to say the names. But for example, Banco Santander, long time ago, okay, they were expropriated in Venezuela. Okay, so they applied to the investment treaty between Spain and Venezuela. And a couple of years ago, Repsol, which is the Spanish oil company, they had the same situation with Argentina, and it was expropriated, and they went through the protection of investment. Consequence, it was an arbitration in New York. Because of these treaties, they provide international arbitration under the scope of the United Nations. Okay, so there is a specific chamber within the United Nations with an arbitration which focus on these international bilateral investments. And for you to know, rough numbers, while in both cases, what happened? The governments expropriate those companies. If I remember well, for Santander, which was many years ago, it was like they were offering 400 or 500 millions. Santander asked for more than 1,000, so 1 billion, and finally the figure was very close to 1 billion. So it works. So in industries like financial services, energy, pharmaceutical industries, health, it has been used.
But it was enforced. I mean, maybe the result was,
yes,
and the countries.
And the resolution have to. And the countries have to pay. Venezuela has been paying. Argentina, some years ago, they had already some of these resolutions still to be paid, but yes, they have been paid. Otherwise, they would receive sanctions from the United Nations.
Wonderful. Very interesting. Well, thank you so much. It's 12:03. Thanks everyone for joining us today. Thank you, Ricardo, and thank you, Eduardo, for sharing with us a lot of interesting information today. I hope this has been useful for all the attendees, and I believe that there will be more questions. We will share the contact information of Eduardo and Ricardo so that you could contact them directly. We will share the presentation, and also we will share the video, but you can also check our YouTube channel where you might be able to find more videos with more webinars. Our website is www.spainchamber.com. Thank you, everyone. Have a wonderful rest of the week.
Thank you very much. A pleasure.
Thank you to everyone. Thank you. Bye.
Bye now.